Welcome back to Alpha Recap, your quick, fired-up wrap of the market day. We're coming to you after the close with the top crosscurrents that move stocks and sectors. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. A semiconductor shock, a big defense contract, and a biotech regulatory milestone all in one session. So, where do we want to start?
Let's lead with the headline mover, Intel. Today, it plunged down about 4.5% on heavy volume. The stock finished around $103 on roughly 120 million shares changing hands.
That was the market mover. Analysts and traders flagged it as a concentrated sell session. And that kind of action in a big cap chip name can reverberate across the whole semiconductor supply chain.
Right. And the other thing is, when a name as big as Intel sells off on volume, implied volatility tends to widen. That can make options and short-term flows jumpy for related suppliers and cyclical tech names.
We saw NVIDIA trade modestly higher, up just a fraction of a percent, to about $212 and change, but with very significant liquidity. That tells me momentum traders were active, but waiting for clearer catalysts.
And crypto-linked products showed renewed activity too. The Bitcoin ETF ticked up about 0.2% to roughly $9 on what looked like unusually high volume. Think about 500 million shares.
So the takeaway on tech and flow-sensitive names was really flow-driven volatility. Heavy turnover was the story, more than fresh fundamental news for a lot of names.
Not a great day for chip-linked sentiment. That kind of intraday selling can create whipsaw risk and push traders into or out of correlated names quickly.
Exactly. Analysts note data suggests momentum and flow-driven dynamics were dominating near-term price action. So folks watching implied volatility and short interest updates were likely on alert.
Quick reaction segment.
Wow. Big volume day.
Yeah, that tracks.
Moving on, we had a positive defense headline. Lockheed Martin was named the prime contractor for next-generation logistics and sustainment for U.S. Special Operations Command.
That's a multi-year award that boosts revenue visibility for the defense group. Contract wins like this smooth out revenue cycles for contractors, since backlog and program cadence matter a lot in that sector.
And to add to that, GE Aerospace pushed back on engine delay concerns, saying Boeing had months of engine supply on hand. That reduced some delivery risk headlines, a reassuring note for aircraft makers and suppliers.
Which matters because when supply chain or engine issues pop up, delays can ripple across suppliers and OEMs. So clarity on supply helps narrow that headline risk, at least in the short term.
Short reactions.
Steady defense money.
Contract stability. Big deal.
Let's shift to regulatory and legal headlines. This was a cluster today. 2 class action notices popped up, inviting lead plaintiff interest in separate matters against AeroVironment and Peabody Energy.
Class actions create a legal overhang that can compress multiples and add uncertainty for quarters. These aren't overnight issues. They can drag on. And analysts usually bake in scenarios for potential costs and timing.
Also on the legal front, there's a constitutional challenge to extended producer responsibility legislation in the U.S. That ruling, when it comes, could change compliance cost assumptions for some manufacturers.
And policy-wise, the U.S. reportedly tightened visa rules for foreign students and journalists. That's a direct revenue risk signal for education providers and certain media businesses that count on those flows.
Bottom line, legal and regulatory headlines were clustering, and data suggests these risks are elevated catalysts to watch for portfolios with concentrated exposure.
Now, on the healthcare side, we had a pretty clear positive. Vanda Pharmaceuticals received a favorable opinion from the European regulator's Orphan Committee for imsidolimab in generalized pustular psoriasis.
For listeners who aren't deep in biotech, orphan designation is essentially a regulatory recognition for a rare disease. It can provide incentives like market exclusivity and support a clearer pathway to commercialization in Europe if formally granted.
Right, that reduces some uncertainty for a development stage program. But commercialization still depends on later approvals, pricing, and payer uptake. So it's an important step, not the finish line.
We also saw distribution moves. EHE Health expanded access to a multi-cancer early detection test, which shows continued momentum on commercial rollout for those diagnostic platforms.
And another small but interesting note, Boehringer Ingelheim announced a human-animal bond certification move that could help in veterinary channels, which matters for peers like Zoetis and Elanco.
Quick reaction.
Regulatory clarity on one hand, distribution on the other.
Yep. Healthcare's bifurcation was clear. Some programs got regulatory clarity, while others are being pushed by distribution partnerships. Analysts note reimbursement and uptake remain gating factors.
We also had some notable coverage and analyst moves. Freedom Capital upgraded Johnson & Johnson after a decent quarter, Clear Street started coverage on PayPal at hold, and a big bank initiated coverage on Zolongi with a buy, which sparked intraday volatility.
Coverage changes like that tend to increase liquidity and can reprice smaller or international names quickly. They're often catalysts for short-term volume spikes.
Let's do rapid-fire market signals from today. Path was essentially flat. AAL slipped slightly on heavy turnover. NU saw active selling. ONDS dropped several percent with large participation. And that Bitcoin ETF we mentioned had sizable flows.
Those names highlight a market with elevated turnover and mixed directional conviction. A lot of activity without a unified trend.
Emerging patterns. Elevated event risk from legal and regulatory items. Flow-driven volatility across ETFs and stocks. Defense and aerospace offering steady, contract-driven visibility. And a healthcare patchwork of regulatory wins and distribution expansion.
Analysts are saying these patterns are consistent with a market balancing macro caution and active reallocation. It felt less like a broad risk-off day and more like selective, catalyst-driven moves.
So what should listeners watch next? First, any company follow-ups from Intel or analyst commentary that explain that sell-off, especially options implied volatility and any short interest updates.
Also keep an eye on additional details from Lockheed or U.S. Special Operations Command about that logistics award, and on the formal European Medicines Agency decision and filings from Vanda that would clarify the orphan timeline.
Legal milestones matter too. Watch lead plaintiff appointments and filings in the AeroVironment and Peabody matters. And on policy, any guidance from the Department of Homeland Security tied to the visa changes.
Finally, ETF flow reports overnight for the crypto products and volume metrics for big names will tell you whether today's moves were transient repricing or the start of a broader trend.
Okay, final takeaways. 1. Flows and liquidity were the day's heartbeat. Heavy volumes were driving a lot of the action, not fresh, broad fundamentals. 2. Defense awards and aerospace clarifications offered pockets of stability. 3. Regulatory and legal headlines raised event risk that could persist.
And remember, analysts note this is informational context only. We're not recommending buying, selling, or holding any security. Data suggests these are the key themes to watch as markets reset.
If you want to dig into any of the items we talked about, head to stockalpha.ai. You can ask us questions directly through our Q&A feature, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more highlights and analysis. Until then, stay curious and keep an eye on those flows. Bye for now.